this will actually be a workshop format. I think, given that we are so few, we can engage in some discussions, I hope, and share some views. Thanks for coming here. Hopefully we'll be joined a bit more by some more people. I'm Charlotte Hassing, and I'm the Global Head of Products at Banking Circle. We are a payments infrastructure bank licensed across Europe and APAC. And I also have Tomas, our General Manager here in Czech Republic, and Damien, represented here from Poland, with me today. So, on the agenda side, I wanted to tell you, now that we are on the topic of building blocks for fintechs, I wanted to tell you a bit about Banking Circle's story, how we came to be where we are today, our journey around building the right platform so we can process instant payments 24/7 at scale. And then that takes me sort of into the topic of instant payments in general in Europe, and then the models by which we allow our clients to access instant payments, be that virtual accounts or what we call agency banking. I was planning to ask a bit around, but maybe, given that we are so few, maybe I can just ask you guys in the audience which industries you work in within. Is it embedded finance, or do we have neobank sitting? Where do you work, Jan? Can you tell me?
So I recognize Yoruba as my former employee. So do you want to say?
Yoruba is a platform for truckers and logistic companies, but we're giving them credit for and we're giving them fuel cards and other services on the road. So we want to enhance this. We have our own EMI license because we're producing Visa cards as well, but we're moving forward to being fintech and more fintech.
You're basically building a digital wall.
Yeah, we're building digital wallets.
Okay, exciting. Anyone else wants to share? Moving on then. So a bit of history. Sorry. So Banking Circle, we have our roots in Copenhagen, Denmark. I also arrived from there this morning, and more than 10 years ago, we actually started out as a sub-department in a Danish bank, Saxo Bank. You may have heard of it. Started as a sub-department with a mission to make cross-border payments faster and more cost-efficient. And then we carved out, as I call it. So we did a sort of a carve-out, became our own payment institution license holder, and received an investment, or were invested into, by EQT, a very large private equity firm. And that kind of gave us the boost to get our bank license, which, yeah, I'm sure some of you are also familiar with. That is a very costly affair. So that investment from EQT really gave us the boost we needed to get our bank license in Luxembourg. And we went for Luxembourg to get access to the euro. And generally, getting that banking license has kind of been the fundamental, or the foundation that we needed to achieve our mission. Because with that banking license, that has enabled us to get direct access to the different instant payment schemes and other types of payment schemes around the world. And when I say direct access, what I mean by that is getting an account with the central bank, getting access or connecting directly to the high value payment system, the RTGS system of the currency, and then adding on top of that with access to the commercial payment schemes. So a good example of that is SEPA Credit Transfer or SEPA Instant, you may have heard of. So that banking license has really been the foundation for us and allowed us to achieve our mission of gaining direct access to payment schemes around the world. And over the past couple of years, that journey has really sped up or accelerated. We achieved our license in Singapore, a major payment institution license in Singapore last year. We went through with the acquisition of an Australian bank. So that means that we are now licensed both in Europe and across APAC. And then this year we have a very strong focus on solidifying our European footprint. You'll see a bit more about that on the following slide. But before moving on to that, I wanted to make a point here. being on the topic of building blocks of fintechs. And that point was that when I joined around 6 years ago, so a while after we'd gotten our bank license, I was employee number 200. And even though I was employee number 200, it still felt like I was joining a startup. And I don't think you would call a company of 200 people a startup at that point, but it really felt like it. We'd kept the mentality of being able to, we had a very clear goal, clear mission, and we were able to move fast with very little bureaucracy, I would say, around our decision making. So we've really kept to having, minimizing, despite of course being regulated as a bank and all the governance that follows along with that, we've really kept to having minimal bureaucracy. And I think that is quite core to and key to Banking Circle's DNA, that even though we are now a global bank, we've kept the feeling of being a fintech and having that startup mentality where we can just do things and co-develop with our clients. Or what we also experience is getting still a call from our CEO and founder to discuss a matter in detail, because that's where we still are. We have the founder members still being part of the team and being part of the details of the day-to-day, which I think is quite unique and amazing. And at least really fun to work in that sort of environment, I think. So that has taken us to where we are today. We are connected to almost 6. I say almost because as of today, we are connected to 5 instant payment schemes, and we're adding the Swiss instant clearing in the very, very near future. So we're connecting instant schemes around the world, and we're adding hopefully more to come this year, with a lot of focus, as you can see, on the Czech Republic, Hungary, and Poland, where we are progressed, but of course pending some external dependencies. And the goal of all this is that we can process payments instantly. So already today, you can imagine a payment going in via the instant scheme in Australia. We can process it on our platform also instantly in a product that we call BC Now, and then pay it out to a UK recipient via the instant scheme faster payment. So suddenly a payment that used to maybe take 5 days and cost $50, we can now do that in 10 seconds. And that's maybe even being a little bit conservative, all the way from Australia to UK. And that's the mission we're on. And just keep adding more instant schemes to our banking circle. I wanted to ask you a question here on show of hands. How many of you do business in any Euro countries? And how about in the UK? We have one there. And what about Australia? Okay, you're a very global. Yes. It helps. Yeah, it does. Switzerland, anyone? The Nordics? Sweden, Denmark? Great. Then on to our platform. Actually, I had a bit of an anecdote here, because also back when I joined around those 5-6 years ago, we were in the middle of a huge migration project that we called OTA Go Live. We love abbreviations in fintech. I think it was short for Oracle to Azure Go Live, and it just essentially covered our entire move from our previous infrastructure to being fully cloud-based, Azure-based. And it was a huge project. It was, I think, 50% of the company was involved in that project, and it certainly came with a cost when it comes, an opportunity cost when it comes to that we had to down prioritize some commercial priorities to be able to execute and deliver on this technical project. And I think that has also been part of the journey that we've had to take some quite tough choices when it comes to being able to gain some short-term revenue, delivering a specific feature or product to a new client asking for it, versus getting the platform right. And we've certainly done a bit of both. We have done some quick development for our client, building up a lot of technical debt, and then having to clean it up later. And then we've also had a project like the one I talked about, our OTA Go Live, which was really, required our commitment and prioritization. But it has taken us to where we are today, fully cloud-based, always on, available 24/7, 365, we can, with our API, and that is a lot of, our platform and our products are very much available through API. I'll get to that on the next slide as well. But through our API, that also allows us to perform upfront payment validation. So when a client initiates a payment, we will immediately give them feedback if we, for some reason, aren't able to process the payment. So you don't have those delays of and lack of visibility into what is happening to my payment. And that the whole API platform has really given us the ability to deliver that service to our clients. And then, of course, on top of it, it also allowed us to automate things for our clients. So processes that are usually manual, responding to a recall or an RFI, that is something that our clients can do through our API, allowing them to automate on their side. So that has also been quite key to our priorities. And another element that I wanted to highlight is that we've also been very committed to having our tech stack built in-house, so we can be fully in control of it. We weren't, from the very get-go, we needed a quick start, so we bought a module out of Oracle, hence the Oracle to Azure project name. We bought a module called FlexCube, a core banking system. I don't know if some of you know it, but we bought that, and so we've certainly also bought some things to get started faster, but we have been on a mission and really committed to building our tech stack in-house so we can be fully in control, both in terms of new developments, whatever, adjusting it to our clients and our types of needs, but also for scalability. Because we have clients with a lot of volume, we need our payment processing systems to be up to speed and to be able to handle those volumes. Any questions, by the way? I'm just rambling. You please interrupt me if you have any questions, comments. Then, speaking of API, it is by far the most used method for payment initiations by our clients. When we look at the outgoing payments, we can have up to a few millions payments a day, actually, on very good days. And more than 99.5% of those payments are initiated via API. So without a doubt, that's the preferred channel from our client's perspective. But we also have the very classical client portal, the online banking portal you would log into, offer Swift as a payment initiation channel and a reporting channel, as well as a more file-based service called an SFTP service. And this leads me to a question to the audience in terms of what channels you allow, or which channels you offer to your customers for accessing your products. Is that in line with what you see up here, or are you also primarily API-based? Yeah, API, yeah. Yeah.
And sometimes the servers SFTP.
Yes.
Some clients are.
Yes, I mean, it's the same for us. The larger incumbent clients, those are often SFTP.
There's also another aspect what I've seen a lot is, yes, it's almost legacy technology, but some businesses keep it as a kind of fallback. If there's an issue with the API, you still have a way to operate it through manual file uploads for a couple of hours before you resolve the problem.
Great, and I think actually also sometimes on the client portal side, even though that is very dependent on manual, we also see that can be a way for clients to kind of familiarize themselves with what we can do before they invest in API development and API integration. So that can be quite handy for those types of clients. Then back to our mission of connecting the world's instant payment schemes so we can make cross-border payments faster and more cost-efficient. And in Europe, we certainly see an adoption of instant euro payments, especially. I just checked the ECB stats, and last year, about a fourth of all SEPA payments in Europe were instant payments, so it's really picking up. And the graph, or the very busy bar chart I've brought here, shows the adoption of SEPA Instant amongst banking circle clients. So if you look all the way to the right, you can see that roughly a third of all of our SEPA payments are SEPA Instant payments. So we our clients are a little bit ahead of the curve, looking or comparing to the overall European market, but it is adopting and very quickly. And I think of course, please go.
What are you thinking about the stable coins?
We are thinking about it a lot. We actually just got our CASP license coming through a little less than a month ago, and we are venturing into the digital asset space, looking into offering on-ramp and off-ramp and payouts. So it's something we're building, and I think it kind of the end goal for us is that you could almost see stablecoin as an additional currency, and that we can then connect the world's instant fiat schemes to stablecoin payments and be that bridge between fiat and digital assets. That's the ambition. Of course, we're starting, but yeah. So I think the adoption is driven both by client expectation. I think we're all kind of more and more geared for instant is the expectation, but it's certainly, especially in the EU, also driven by regulation. There's been a number of regulatory deadlines last year, and for the non-euro countries, if you are doing separate credit transfers, you will be obliged to also do separate instant payments by July next year, both incoming and outgoing. So it is certainly also driven by regulatory push to connect to these schemes. Now I'm jumping a little bit sort of directly from from instant payments and into how one thing is our clients can access our products through the different channels that we offer, like API and so forth, but how do they come to life, these instant payments? And one of the ways is through our product that we call virtual account, or our virtual accounts product, very well known phenomena or concept. And I think high level, what virtual accounts offer is fast access to a market, scalability and flexibility. And I don't know how familiar you are with the virtual account structure, but generally or overall, first of all, I might say there isn't like one definition across Europe of what a virtual account is, but generally the concept is that it works as a sort of routing mechanism, so payment can go in or be directed to a virtual account number, and the payment going in or the funds flowing in will always settle or flow up onto a master account. So funds aren't held at the virtual account level. It is sort of a doorway into a master account. And what's neat about that is that when you look at the right-hand side, it allows for multi-currency. So the same virtual account number can be used for collecting or sending payments in a number of different currencies, and the payments flowing in or flowing out will settle on the master account of the currency of the payment. So it can go like for like. And I think that is really one of the key strengths of virtual accounts. On top of it, then the fact that you can do locals, I've tried to show it here, I know it's a little bit small, but show the different local representations or prefixes. You can see the same sort of account number being repeated across these different representations. And the neat thing about that is that it gives one account number the ability to seem local or be local in multiple jurisdictions. So it can give that local presence, which helps in removing payment friction, because we still see IBAN discrimination, even though it's not allowed, and it also just can create, or it will be in some cases the prerequisite for even connecting to the local payment clearing scheme. It's an extremely successful product from our perspective. It is very much used by our clients, and funny story, it actually kind of we stumbled upon it a bit randomly as part of that system that I mentioned earlier, FlexCube. It was a standard module in FlexCube to have virtual accounts, and we kind of stumbled upon it, figured, that could be an interesting feature, let's try it out. And it certainly turned out to be an interesting feature. And then since then, of course, we've taken it out of FlexCube and built it into our own platform, again for scalability and control, but it was a bit of a random thing we stumbled upon, and then it turned out to be major. Any questions to this virtual account space, or do any of you work with virtual accounts? Eurovac, yeah.
Not working, but would like to.
Would like to. how do you see, what do you see as the benefits? I will bring you the mic here. How do you see the sort of use case or benefit in your scenario?
In our scenario, the most benefit is money remittance.
So ease of reconciliation, having, yeah. Interesting. I think that is also the sort of beauty of virtual accounts. It can range from being, acting as that payment routing tool, easing reconciliation, to almost acting like a real payment account when it's it can be a named virtual account, and then it becomes quite handy also for transparency across the payment chain. Yeah, sure.
One thing I would mention here with virtual accounts and reconciliations, yes, there are other ways to reconcile payments. So you use the various narrative fields or documentation, but then that's never guaranteed to be accurate. If that piece of information is misrepresented, the reconciliation wouldn't work. The beauty of virtual accounts is that you literally force the other party to instruct the payment correctly, and then reconciliation has a much, much higher accuracy rate, which means manual processing goes down, everything runs way smoother. At least from my experience, this is what I've seen as one of the top use cases for virtual accounts.
Agreed, very good point, that it completely removes the reliance on information in the remittance fields, and you have that unique identifier. Then we're nearing the end. The other access model that I wanted to, or product of ours that I wanted to talk about, is agency banking, also known as scheme sponsorship or indirect access to scheme, and that's another way of accessing instant payments, our instant payment capabilities and payment schemes in general. So I've kind of highlighted the three different models, and you have Banking Circle all the way to the left, going always for direct scheme access, so removing as many intermediaries as possible. We're opening our own central bank account, connecting directly to the scheme. That is quite costly and complex. We know, we've tried it a lot of times. Then on the other hand, or all the way to the right, you have the virtual accounts. Very fast tool to get to market quickly, scalable, flexible, as we've just talked about. May sometimes not be as future-proof because you're issuing accounts, or you may be leveraging accounts issued on a Banking Circle's clearing code, which can create some friction later on if you want to switch to a different model, where you would need to give your users new account numbers. So it leaves you with a little bit less control, but of course it gives you a lot of speed and access to a market quickly. And then we have that model sort of in between, the agency banking model. And what that is that it gives you access to a payment scheme under your own, on accounts issued by yourself under your own clearing code, under your own BIC, but without you having to do the sort of the hassle of opening an account with a central bank and connecting directly to the clearing infrastructure. So it's a model. It's a sort of in-between model that offers, I would say, the best of both worlds, but with more investment than the virtual accounts. It does come with, you need to be scheme adherent, and you need to understand the market that you're operating in to a large extent to go for the agency banking model. So it was just to kind of cover both sides of the equation. I won't spend that much more time on it. This is the end-to-end flow. So unless any questions, I think I'll move on from this, and then move to the concluding slide. So on the key takeaways, I think the learnings from Banking Circle has been that it's been extremely important for us to prioritize getting the platform right, and of course, MVPs are also key. We also have needed to build something quickly, validate it, and then improve it or kill it. But it has been extremely important for us to prioritize getting the platform right and making it scalable. Choosing the right partner has also been key. If your partner has limits in terms of their scalability, those limits will impact you as well. So your downstream dependencies are just extremely important in this game. And then finally, the other, I think, key learning for me in Banking Circle is sticking to, to the extent possible, sticking to less bureaucracy, sticking to the startup mentality. Even though we're a bank, it's possible to minimize sort of the processes around decision making, and I think that has really enabled us to move fast. And then the final slide I have here, a QR code that you can scan and get access. What can I get access to through this? Can you tell me, because I can't remember?
So we just have, scan it to keep in touch. We have a bunch of collateral and use cases that show what we're doing with a lot of fintechs who are scaling within the region or globally. So yeah, have a look. Let us know what you think. And if you want more information, I know most of you are already in touch with Thomas, but you can get more information there too.
Thank you.